General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance. Content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Excuse me. All right, so that coffee's not that bad. I know I need to yell because I left off at midweek. So midweek would have left me off here. Start here. Well, that's not here. Hold on, wait. Go do this. Start new. Here. Okay. What's going on with this? Select bar. It says Wednesday, and then when it goes to select bar, it pulls it to Friday. It doesn't pull it to Wednesday. Okay, this is odd. Let's close all of this one by one. Okay, now let's see. Let's do one day. See what this looks like. Just go to a whole different chart. Start a new one. Here we go. So it was that CFD chart. It wasn't the futures chart. But this is the chart I trade on. I could tell by how the markup is. This is a plan execution chart. Plan, execute. All right, so this is where we was at on Wednesday. We reacted here, broke through this breaker. This is an interesting candle, open, high, low. This is almost like where you could have got in right here. What time is this? 9. This is 10 o'clock. We ran. This was interesting. Came back here. What was this news? ADP not this acted as NFP because we were closed. So for the midweek, can I do it like this? And enter. Perfect. By the end of the week, or by the end of the day on Wednesday, we could have said the anchor point was assumed, but not confirmed. We have a retest during New York Equity Open, I believe that is. Or just say New York Kill Zone. Yeah, that's just a wick. Yeah, ain't nothing. You know, it's just a wick it did. So the weekly bias template would have been Wednesday midweek reversal. Would have been the adjustment. And in hindsight, the best course of action. Because we didn't have NFP. In hindsight, the best course of action because we didn't have NFP. Or NFP because NFP was canceled because of we just didn't have it, like it wasn't scheduled, but because NFP was canceled due to government shutdown. No shifts And framework hit rate, it's not applicable here. This is just, I want to highlight and anticipate the high or low of the week confirmations. In order to catch the true low, you need to be Tuesday, Wednesday. You need to, I'm thinking Tuesday and Wednesday might need to be look at London more. Time binds in alignment. About this time, Wednesday, I checked out and decided to paper trade. The rest of the week to stay in habit with my NFP routine of only trading prop Monday through Wednesday on NFP week. That's not my money, so I gotta kind of manage it different. It's not like I could freestyle. You can kind of freestyle on your personal account, but you still kind of want to have that organized. What was our expansion or mitigation signal? It's definitely sweeping this. You can kind of say if this is our range. Should I quadrant it? No, just keep it simple ICT. Current range. Wednesday open. Raid on liquidity. We disrespect the breaker. Fair value gap. And we disrespect so many things here. Let's see if we have like a typical re-entry here. Close above this up candle here. Internal range liquidity here. Is this the newest candle? It's 8:15. So 8:15. It's right here. Okay, cool. And then this is the 9 o'clock candle. Nope, this is the 10 o'clock candle. So 8 set us up. 7. And this the 9. And then the 10 is the expansion. Okay. And this will be anchored. Hold on, I want to X in it though. Okay, that works. Or do they have the bullseye? X work better. Okay, that's even better. Okay, cool. Okay. Hold on 1 second. All right, let me get my coffee back together. No, the expansion began with a OLR by running Monday and Tuesday low. High probability versus low probability. Structurally, the trade was high probability, but time was off. We in week 1 conditions. And NFP week protocol. I think things like government shutdown should not affect NFP protocol. As far as trading the delivery and keeping rules to Monday through Wednesday. I haven't figured out the thing for the acronym or the shorthand for government. I thought it was GV. I don't know. I have to look it up. Narrative framework accuracy. This is pretty accurate, I say. The delivery was spot on. Failure tag. I think reading delivery. This one. Should be Wednesday. Mid-week reversal. I gotta add that to the case log. Where's my draw base marker? add this week to case log Wednesday midweek. That little dry erase board for your desk is like a secret weapon. All right, this, do it one thing at a time. So here, since we don't do that, cool. And then this Wednesday midweek would have had to been October 1st. So let's fix that. Okay, cool. That's actually perfect now. All right, y'all have a good day. Peace.